nightly business report.
Good evening. Tonight, the International Monetary Fund will examine Sri Lanka's Extended Fund Facility Program on the 28th of this month. If authorized, $333 million in funding will be available to Sri Lanka to aid in its economic recovery. Despite the anticipated rise in garment exports, the Joint Garment Association Forum predicts that increased price competition in 2025 will result in muted growth in apparel export income during the year. On the second trading day of the week, the ASPI and S&P SL20 indices both increased, indicating gains in the Colombo stock market. Market performance was enhanced by investor confidence, indicating strong momentum. And the majority of Asian stock markets enjoyed gains today, with Chinese tech firms leading the charge ahead of important quarterly earnings releases.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. The International Monetary Fund will review Sri Lanka's Extended Fund Facility Program on the 28th of this month, following a staff-level agreement reached November 23rd, 2024. If approved, Sri Lanka will gain access to $333 million in financing to support its economic recovery.
The IMF is set to review Sri Lanka's Extended Fund Facility Program on the 28th of February this year. This review follows a staff-level agreement reached on November 23rd last year concerning the third review of the program. If the IMF's Executive Board approves the review, Sri Lanka will gain access to around $333 million in financing. This approval would help to bolster Sri Lanka's economic recovery efforts as the country continues to manage financial challenges. The EFF program, which was initially approved in 2016, aims to support Sri Lanka's structural reforms and stabilize its economy. The funds from the IMF are expected to provide critical relief, helping to stabilize foreign exchange reserves and balance the national budget. Sri Lanka's government has been working closely with the IMF to meet the program's targets and ensure continued financial stability. The outcome of this review is pivotal for Sri Lanka's ongoing economic recovery and its ability to meet future obligations.
Chief Government Whip Minister Nalinda Jayatissa assured that the government will reduce the fuel tax in Sri Lanka, confirming that steps have already been taken in this direction. Speaking in Parliament, he announced that a comprehensive report on the fuel tax will be submitted soon. The report will detail how the Ceylon Petroleum Corporation became a loss-making entity and the involvement of past ministers in the process. Minister Jayatissa made these remarks in response to Sri Lanka Freedom Party MP Dayasiri Jayasekara, who had questioned the government's earlier promise to reduce the 50 rupee fuel tax. He emphasized that the subject minister will address these issues in the upcoming report. The government's commitment to reducing the fuel tax is expected to ease the financial burden on consumers. Increased price competition this year is expected to lead to subdued growth in apparel export revenue during the year, despite the forecast increase in apparel exports, according to the Joint Apparel Association Forum. Johan Lawrence, Secretary General of the Joint Apparel Association Forum, highlighted the pressure on prices in the apparel industry due to low price quotes from manufacturers and buyers demanding even lower rates. While expecting a surge in apparel export volumes for Sri Lanka in 2025, Lawrence noted that growth in volume would not translate into increased revenue as pricing pressure remains high. He pointed out that countries like Bangladesh with larger manufacturing scales can offer competitive prices. Lawrence emphasized that the industry's priority this year would be consolidation rather than expansion, given the uncertain market conditions. He also mentioned the potential impact of the US-China-Canada tariff war, which could lead to inflation and reduce consumer demand. When asked about the forecast of 2025, he stated that the revenue target was yet to be finalized. However, he noted that Sri Lanka's apparel export revenue had increased by approximately 5% year-on-year compared to 2023, which was seen as satisfactory given the challenges of 2024. Sri Lanka's 2025 budget, while in line with IMF targets, has raised concerns about the long-term impact of increased public sector wages and balancing welfare with fiscal discipline. Experts, including Thilina Panduawala from Frontier Research, praised the government for maintaining fiscal prudence and aligning public sector spending with the 2.3% primary balance target. The budget allocates approximately 130 billion rupees for welfare and public sector spending, reflecting the need to meet IMF requirements. Panduawala also highlighted the conservative revenue targets for vehicle imports, suggesting they are achievable. Umesh Moramudali, a researcher on public debt, welcomed the increased capital expenditure, which signals a renewed focus focus on stalled development projects, including those funded by Japan and China. However, some economists, such as Advocata Institute CEO Dannath Fernando, raise concerns about the inflationary effects of higher public sector wages. Fernando warned that overspending could pressure the rupee and destabilize the economy, despite acknowledging the budget's positive policy direction. The focus on private industrial zones and social safety nets has been praised, but the success of these measures will depend on effective execution. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo stock market saw gains on the week's second trading day, with both the ASPI and S&P SL20 indices rising. Investor confidence boosted market performance, signaling positive momentum. For further insights on this, we speak with Manusha Kandanara, Chief from First Capital Holdings.
Thank you, Anuradhi. So the stock market experienced a day of volatility, starting off strong with positive sentiment and increased activity in the morning. However, by midday, a wave of selling pressure caused the market went down. Despite this, the market managed to recover by the close of the day as well. Amidst the increased participation from retail and high net worth investors, the all-share price index closed the day in green at 17,194, gaining 38 points, marking a 0.22% increase from the previous day as well. The most significant contributors towards the positive index were Melstar Corporation, HNB, Hemas Holdings, Commercial Bank and Sampath Bank. Additionally, specific stocks in the construction and banking sectors such as Sierra Cables, Access Engineering and Sampath continue to attract investor interest throughout the trading day following the budget proposals yesterday. Amidst multiple off-board transactions, turnover stood at 5.5 billion rupees, marking a 4.7 decrease from the monthly average as well. The top three gainers of the day were Nation Lanka Finance, Kodmale Holdings and Lee Hedges. Meanwhile, top three losers of the day were SMB Leasing, UB Finance and Durden Hospitals. Thank you.
Sri Lanka's purchasing managers' indices for January of this year show expansions in both manufacturing and services sectors. The manufacturing PMI recorded a strong value of 59.0, reflecting continued growth with positive contributions from all sub-indices, particularly in textiles and apparel. For further insights, we speak with Ranjan Ranathunga from First Capital Holdings.
Thank you, Anuradhi. The Purchasing Managers Index for manufacturing has significantly increased in the month of January, with the manufacturing side increasing to around 59 basis points, while a similar increase or an expansion was observed in the services side as well, as the index closed in on again 59 basis points, reaching about 58.5. Now, on both cases, on the manufacturing front, we are seeing a significant amount of new orders coming in. However, we are seeing a slightly slower level of employment. However, supply delivery times are gradually expanding, so you are seeing that the new orders are basically increasing the activity levels and in the system. And in addition, if you take the services side, we are seeing a continuous amount of new businesses coming in, and with that we are seeing activity expectations into the future also significantly improving, and both these factors are positively affecting the economy and the GDP. So we are expecting GDP growth levels to be at healthy levels during the first quarter as well. So compared to December, we are seeing a significant improved level of expansion in terms of manufacturing. However, slightly slower levels in terms of the services side. Thank you.
Gold prices rose in Asian trading today, holding steady despite a rebound in the dollar. Spot gold climbed 0.5% to $2,912.81 per ounce, while April futures also gained 0.5%, reaching $2,925.72. Haven demand for gold remains strong, driven by ongoing uncertainties over U.S. trade tariffs and interest rates. Meanwhile, broader metal prices face pressure from a stronger dollar. Geopolitical tensions also added to gold's appeal as a drone strike on a Russian fuel station raised concerns about the escalation of the war with Ukraine. Despite the dollar's overnight rebound, gold prices stayed within striking distance of last week's record high. Brent crude oil prices continued to rise today as well, extending gains from the previous session. After a drone strike on a Russian oil pipeline reduced flows from Kazakhstan, Brent crude futures climbed by 0.3% to $75.45 per barrel, while U.S. West Texas Intermediate crude futures increased by 75 cents, reaching $71.49 per barrel. The WTI settlement was delayed due to the U.S. President's Day holiday. A senior Russian official confirmed that Ukrainian drones attacked a pipeline in Russia, which accounts for around 1% of global crude oil supply, potentially disrupting flows to international markets and impacting U.S. companies. The Sri Lankan rupee strengthened against the US dollar today, with both buying and selling rates dropping. It also appreciated against various foreign currencies, including Gulf currencies. Let's now take a closer look at how the Sri Lankan rupee is faring against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. Sri Lankan Airlines engineering team completed A321neo maintenance for Salam Air ahead of schedule, enhancing its reputation as a reliable third-party service provider.
Sri Lankan Airlines engineering team has successfully completed base heavy maintenance on A321neo aircraft for Salam Air ahead of the scheduled completion date. The maintenance work included replacing the right-hand main leading gear seal on the aircraft. This achievement highlights Sri Lanka's engineering capability and reliability in providing base maintenance services to the third-party clients. Salam Air, a long-term repeat customer, benefited from the efficient service provided Sri Lankan Airlines team. Over the years, Sri Lankan engineering has established itself as a trusted provider of maintenance services in the region. The airline has seen a consistent influx of both repeat and new customers for its services. The successful completion of the A321neo maintenance further strengthens Sri Lanka's engineering reputation in the competitive aviation sector. With this accomplishment, Sri Lankan Airlines continues to showcase its expertise in aircraft maintenance.
Xiaomi has officially launched the Redmi Note 14 series in Sri Lanka at a press conference in Cinnamon Life, Colombo. The new series showcases significant advancements in photography, design and performance. Shubham Jangir, Country General Manager for Xiaomi Sri Lanka, highlighted the brand's focus on pushing the limits of smartphone technology. He emphasized that the Redmi Note 14 series features flagship-level cameras, powerful processors and impressive durability. Jangir expressed confidence that the devices would set new standards for performance and style in Sri Lanka's smartphone market. This launch reaffirms Xiaomi's commitment to providing high-quality, accessible technology to local consumers. Classic Travel has been named the preferred sales agent for MSC Cruises, marking a significant step in expanding luxury cruise options for Sri Lankan travellers.
Classic Travel has been appointed the preferred sales agent for MSC Cruises in Sri Lanka, offering local travellers enhanced access to luxury cruise experiences. MSC Cruises, the world's largest privately held cruise company, is known for its innovative ships, exceptional hospitality and commitment to sustainability. Through this collaboration, Classic Travel will offer seamless booking services via MSC Cruises' online reservation system, providing instant quotes and availability. Shiham Imauddin, CEO and Director of Classic Travel, expressed excitement about bringing the world-class cruising experience closer to Sri Lankan customers. This partnership strengthens Classic Travel's position as a leading travel solutions provider in Sri Lanka and beyond, with operations in Bangladesh and the United Arab Emirates. The collaboration is expected to boost the growing demand for the high-quality cruise vacations in Sri Lanka. With MSC Cruises' exceptional offerings, Sri Lankan travelers can now enjoy more luxurious and diverse travel options.
The NIBM School of Business celebrated its 50th anniversary by signing a Memorandum of Understanding with Unilever Sri Lanka, marking a significant milestone. The MOU signed by Unilever HR Director Ajit Thomas and NIBM Director General Dr. D.M.A. Kulasurya strengthens the collaboration between academia and industry. This partnership will provide NIBM students with valuable opportunities such as internships, training and professional development programs with Unilever. NIBM School of Business continues to bridge the gap between education and real-world business operations, further enhancing its commitment to student success. Director Kolita Ranawaka emphasized the school's dedication to offering students top-tier education and industry exposure. This collaboration with Unilever highlights NIBM's vision of shaping future business leaders in Sri Lanka. Fonterra Brands Lanka strengthened its commitment to Sri Lanka's dairy sector with the opening of a new milk collection and chilling centre in Hanwella. Fonterra has established a new milk collection and chilling centre in Hanwella aimed at supporting hundreds of local dairy farmers. The initiative enhances access to milk collection facilities and support services, improving efficiency in milk storage and collection. The centre, with a 3,000-litre chilling capacity and advanced testing facilities, will help smallholder farmers produce more high-quality milk. Fonterra's investment in infrastructure and technical resources aims to empower farmers, improve productivity and uplift their livelihoods. This initiative is part of Fonterra Brand Lanka's long-term goal to strengthen Sri Lanka's dairy industry through sustainable growth and partnerships. The opening ceremony was attended by Fonterra's leadership team and key stakeholders from the Animal Production and Health Department. The Hanwella Centre further supports Fonterra's mission to enhance the dairy sector and uplift farming communities. Indira Malwatta has been appointed chairperson of Samsung International plc. She succeeds Dr. D. Kulatunga Rajapaksa, who resigned in November of last year. Malwatta, an independent non-executive director since August of 2020, brings over 40 years of experience in export promotion and international trade. She holds a combined degree in economics and geography from the University of Peradeniya and was the first woman chairperson of the Export Development Board. Malwatta's expertise spans several sectors, including industrial, agricultural and services, having contributed to various international development projects. She was honoured with the WIFT's Foundation Lifetime Achievement Award in 2016 for her contributions to business and commerce. Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks saw most markets advancing today, led by a rally in Chinese tech stocks ahead of key quarterly earnings reports. The Hang Seng Index surged 2% on strong technology sector performance, while China's major tech firms such as Baidu and Alibaba saw notable gains. In contrast, Australian stocks dipped 0.5%, largely unaffected by the Reserve Bank of Australia's expected interest rate cut, which was accompanied by a cautious outlook on further easing. Investors in China's Shanghai indexes remained subdued, while the broader tech sector continued to build confidence on the back of artificial intelligence advancements. Honda will resume merger talks with Nissan provided Nissan CEO Makoto Uchida steps down, the Financial Times reports, citing a person familiar with discussions.
Honda could revive merger talks if Nissan boss Makoto Uchida quits. That was according to reports by the FT on Tuesday. The two Japanese firms had been in negotiations to create a $60 billion giant, but the talks collapsed last week. Reuters sources say that was partly due to Nissan's pride, with the firm refusing to consider a takeover by Honda. Now the FT says the move could be back on if Uchida goes. It says Honda wants to see a new Nissan boss who is more able to manage internal opposition to any deal. Uchida has previously stated his intention to stay until 2026, but the FT says he faces pressure to step down from board members and French partner company Renault. It says Nissan directors have already started informal discussions on the timing of his departure. Analysts say the company looks vulnerable without a deal. It's been left a diminished force by years of faltering sales and management turmoil. Nissan is working on a turnaround plan that involves 9,000 job cuts and a 20% reduction in manufacturing capacity. But it faces mounting pressures, including the rise of new Chinese challengers like BYD. Honda shares were little changed Tuesday following the FT report, but Nissan shares were up over 4% by early afternoon, indicating investor hopes for a deal.
Online fast fashion retailer Shein is under pressure to cut its valuation to less than half the price put on it 2 years ago, ahead of its potential London listing.
Shein is under pressure to cut its valuation to less than half the price put on it 2 years ago, ahead of its potential London listing. That's according to a Bloomberg News report Monday. It said shareholders want the number lowered to about $30 billion. They reportedly think an adjustment is needed to help get the potential UK IPO completed. The China-founded online fast fashion retailer did not respond to a Reuters request for comment. Earlier this month, Reuters reported Shein was set to cut its listing valuation to around $50 billion due to growing headwinds. That was almost a quarter less than the fundraising value of $66 billion the company set 2 years ago. Shein had aimed to go public in London in the first half of this year if it gained approval from UK and Chinese regulators. But the Financial Times reported last week the listing was likely to be postponed. It said it could be moved to the second half of this year after US President Donald Trump's move to close the de minimis loophole. That is a duty exemption in the US for shipments of less than $800, which has helped Shein keep prices low. Industry experts argue the removal of it could hurt the firm's profitability and raise product prices in the US, its biggest market.
Well, that's all from us here on the Nightly Business Report for tonight. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.